Welcome back. Welcome back. Trampoline, episode 3, my boy. Look, bro, I'm telling you right now, I ain't gonna pull the whiteboard yet because I got some things that I need to go ahead and get off my chest at the beginning of this video because this is the part of the video that everybody gonna see. You know what I'm saying? Look, bro, I'm giving a full disclaimer right now. Trampoline is not going to be continued on YouTube. There, I said it, bro. I said it. I'm being honest, bro. I know I told y'all I was going to give y'all a whole strategy. I can't do it. I can't do it, bro. I can't do it. And a lot of people would personally be like, oh, yeah, the strategy is probably so simple. Oh, you ain't got nothing that good. Look, bro. Simple is good. Simple is great. If simple can make you millions, if simple can make you hundreds of thousands, if simple can just make you 1,000, bro, I will go with simple. If I got to do all this jumping through hoops and all this to figure out something, bro, then, I'm not saying it ain't worth it, but that's just more complicated. My stuff is simple, straight to the core. I use basics to make money. You get what I'm saying? However, I can't give y'all Trampoline all the episodes on YouTube, bro. I'm sorry. I am sorry. I'm apologizing right now because I know for whoever tapped in and heard me say I'm giving you a full strategy and you can come back whenever you want. I know you was looking forward to that right there. I can't do it though, bro. I'm gonna be honest with you. I can't do it. I gotta, and there's reasons behind why I can't do it. Such as, let me be fully transparent, bro. Let me be fully transparent with y'all for a second, right? Look, there are a lot of gurus out here. There are a lot of people that involve themselves in trading. There are a lot of people that also scam people, bro, with this type of stuff, or they just do them dirty, or they don't give them information, or they don't communicate with them, or they don't. It's a lot of things that comes with this community when it comes down to what I'm doing that can overcomplicate things, right? And make people run from this type of opportunity rather than flock to it. With that being said, there are a lot of people out here that have probably deceived you, and that's why my goal is to never put anything in front of your face to deceive you, right? Meaning, I'm not telling you, that's why I always say it a lot, that I'm not telling you that you have to go buy these companies or that it's even necessary for you to even truly listen to me. You know what I'm saying? I'm just putting the information out there so that we can build a wealth train together. That's my goal, to build a wealth train, a community that is literally built wealthily. We not moving like nobody else. That's basically what I'm saying. I'm not trying to, bro. And I know when you hear people say that, you probably think to yourself, they have to say that. They have to say I'm not trying to scam you. From the bottom of my heart, believe me or not, I don't want to scam you, bro. I really don't. I really want to find ways to just reach more people and help people make money, bro. Mainly, if I'm being honest, this ain't necessarily, and I told you I'm being transparent, this ain't even necessarily for like older people, like people that's in their 30s, 40s. Now, that's fine. It's fine if you watch me. I hope that you continue to come back. I love you for even supporting me or even just being here to watch a video, bro. For real, sis, whoever. But my videos are more so made for, like, it's the purpose why I'm putting them out there is more so for, like, the younger generation when they start growing up and they looking for ways to make money, because it's always somebody that's, like, the younger ones, they always looking for money. Like, you know what I'm saying? Like, I know that drive because I used to be young, you know what I'm saying? And I know the type of influences that are in the world that'll make you want to have some money. You get what I'm saying? So my goal is to really reach them so that when they get reached, they can build a new generation of people that don't have to get money illegally or even the legal way that is proposed to us naturally, which is working a 9-to-5 job. I don't want nobody to be out here doing either one of those things no more, because I feel like we have so much power given to us from God, bro, that you don't have, bro. One thing about it, bro, and I ain't gonna get on no real rant with this, but one thing about it, bro, you can honestly do anything you set your mind to, so long as you got God in your corner. Obviously, if you one of them people that don't believe in God, I ain't talking to you, bro. I'm talking to my believers, bro. If you believe in God, bro, anything that you want to do on this earth while you are here is possible. You just have to put in the work for it. God ain't giving you nothing out of thin air, bro. He said you have to labor. There's no such thing as thin air work, thin air blessings. You need to work or do something. Something is cause and effect. That's life. That's a law of life. Cause and effect. I'm not about to, like I said, I'm not about to go on a rant because we got to get into this business. But that's the purpose. So look, y'all, episode 3, vibes, you know the vibes. I got the whiteboard with me, you feel me? Got the whiteboard bussing, you know what I'm saying? So look, what we gonna be going over today, we're gonna be going over Fibonacci retracement price zones, my bad, about stuttered, from the 12-month time frame all the way down to the 1 minute. You get what I'm saying? We're gonna dissect that, look at that just a little bit, get a little understanding of what that is, you know what I'm saying? Then we gonna hit take profits and stop losses, TPs, SLs, you know what I'm saying? I'm gonna show you how to place those in the market, you know, just where good spots could be, how you can pick them out, what you can do, you know what I'm saying? Different methods with that. I'm gonna give you that. And then I'm gonna give you and this is my eyes, the most powerful time frames to look at. I'm gonna give you my most powerful time frames that I look at every day, and this is how I look at it. So that's what we're gonna be going over today, bro. With that being said, you already should know, bro. We finna get started. Bro. You know I don't like to waste no time, brother. 3, 2, 1. All right, bro. So look, man. Look, y'all. I ain't gonna lie. You gonna see how it sort of looks crazy, but look, y'all. I sort of messed up. I messed up. I ain't gonna lie. And I didn't intend to, but I accidentally was working when I was literally going over the whole market with y'all, bro. And then I accidentally remembered that I did not change the market to the one that y'all are familiar with. So I was going over a market that y'all are not familiar with at all. And that would have probably confused you. So with that being said, my apologies. I'm gonna figure out how to edit all that the right way, and you feel me, make sure that everything is everything. However, let's try this part again. So we gonna start in 2, 1 right now. You feel me? We're gonna start right now. All right, look, bro. All right. So as you can see, this is your market, right? This is the 12-month time frame. Now I'm gonna do the same thing that I was doing in what I was trying to show y'all, but I was on the wrong market. All right, I'm gonna double tap it. We're gonna go to the left. I want you to just pay attention to how the market looks right now. Just look at how the market is moving. Look at how it's going up, down. See how some points is more so bearish, meaning selling. Some points it's more so bullish, meaning it's buying more. Sometimes it looks as if it's in between, right? All right, so now we're gonna go over. We're gonna knock down all the way back up. Should say knock up. We're gonna knock to the 12 month, bro, all the way, you know, the years, feel me? And now we're gonna go down here, not that. We're gonna click your little drawing thing, and we're gonna click that Fibonacci retracement. We're gonna start it right from when it first started going down. So this was rise, this is down. So we're gonna connect it to this top point, and we're gonna draw it all the way back down to its bottom point. That's how you connect your Fibonacci retracements. Don't matter if you're on an hour, day, whatever. You connect it to either its bottom to the top point or the top to the bottom point, depending on whether you're looking at a buy sell. You get what I'm saying? So right here, I want to explain to you the Fibonacci retracement zones, right? So basically the Fibonacci retracement, what is it used for? The same way that we made zones last episode that you can look at, but they were manually made manually made zones. These are automatic percentage zones. You get what I'm saying? Based off of whatever trend you are currently looking at. You get what I'm saying? So You got a 0%, which is basically when, okay, your 0 and your 1% are your most important ones in this, in a Fibonacci retracement. Why do I say that? Because your 0 basically just means that it's plummeting. Like that point where it's like 0%, you get what I'm saying? Where it's 0%, if it go past 0%, what does that naturally mean? It means something is negative, right? If something goes past 0, below 0 is negative, right? So for a bearish chart, for it to be in negative percentages, oh, you're winning. You get what I'm saying? And obviously it's going to be vice versa for, like, if you're doing a buy, you're going to see that that top point is the 0. If it's going above that 0, then, like I said, it's the same in my eyes. You know what I'm saying? I don't really know how to explain it in that term as far as why the 0 and the 1 necessarily mean so much, but based off the Fibonacci retracement, it does. You get what I'm saying? So don't overcomplicate things. This is why I say let the market be your best friend. It's a lot of tools, it's a lot of things that you can use that can tell you, give you answers, and it can reduce the work that you have to do. Yes, it'll make your graph look a little different, but bro, who cares, right? So your Fibonacci retracement, we got that from right here. We got 0%, 23%, 38%, 0.5%. I should be saying points in front of them, so don't forget the point. 0.61%, 0.78%, then we got the 1, right? Above the 1, this is where we got those breakthrough moments. You get what I'm saying? We got those breakthrough moments. Now, I want to give you a little bit of game with Fibonacci retracement. A Fibonacci retracement can be drawn the way that I just drew it right here. However, it can also be drawn to look at the previous trend and not the current trend. So you can look at its previous trend so that you can gather like a percentage from that. It's cool how you can do it. I'm gonna show you. Trust me. I'm just putting some information out in the air for you. So look, bro, we're gonna go ahead and go down these time frames now, right? Because I done did enough talking with this. So we're gonna go down these time frames, bro. All right, let's peep this 6 month. All right, let's peep the 3 month. All right, you can see at that 0% is consolidating down there. You get what I'm saying? You can see that consolidation point that we pointed out in the last episode. All right, go down. I skipped the week, as you can obviously see. That was an accident, but I'm not gonna go back. I'm gonna be honest with you. I'm not gonna go back. We're gonna go to the 4 hour. We're gonna go to the 4 hour. We're gonna drop down to the 3. Just peep it. Well, actually, right now is not even a point behind peeping it down below this 3 hour, and I'm about to show you why. So look, so you got that 12 month, right? All right, let's go down to your 1 month. You see where that fall? So look, now this is where Fibonacci retracements, I do not advise you to stack a lot of Fibonacci retracements, because then it's going to get very hard for you to even see what zones you're trading in. You'll still see the zone as far as the line of the zone, but you won't really be able to know specifically what zone you're even in, for real, if you're stacking them while you're trading. So if you're just trying to dissect the market, stacking a Fibonacci retracement is not a bad idea. However, when you're actually in it, I don't advise you to sit there and watch your market all day with all these Fibonacci retracements and stuff, because it's going to confuse you. I'm going to be honest. It's going to confuse you. So for the sake of showing you how to use them, we will be stacking Fibonacci retracements, okay? So we're going to connect from that top point down to this bottom right here. As you can see, it has the same bottom as it should. So now you can see some zones within some zones, right? Right. So look, this is why sometimes in a market you'll see wicks, big wicks. For example, you see how right here, this is where the 1 month Fibonacci retracements 100% is, right? Then you look, this is where the 12 months 100% is on its Fibonacci, right? Okay. Right here at this first one, say the market was to rise, and come all the way up here, right? And it touches this zone, right? This zone, 100%, right? Both of them being the 100%. This zone being this close to the next one, it can still reach up to that next 100%. But then when you see that wick close and that line, you see how this line right here, you see the, I don't even know, is that a line? That's a wick. Yeah, it's a wick. I know what I'm looking at, boy. When you see this wick right here, you see how it went up and it touched that other 100%, but then it dropped back down and traded below that other 100%. You have to pay attention to retracements, y'all. Remember what I taught y'all with when we was talking about zones. Support, resistance. The higher it goes, the more resistance that's going to come to try to knock it back down. The lower it goes, the more support it's going to get on its way down. You know what I'm saying? So what I'm saying through that, if I didn't make it clear in last video or even just now, the price is more likely to drop. Let me be honest with y'all. In any investment, the price is more likely to drop than it is to rise because it has more resistance going up than it does going down because it's supporting prices. Okay, you get what I'm saying? It has it has a better likelihood of going down before it goes up. That's any investment. It's any investment. Always remember that. And it sounds crazy coming from somebody that tells you when a trade is bullish and that you can look into it for a buy. It sounds crazy coming from me. I'm keeping it real with you though, bro. All right, I'm keeping it gangster with you, bro. You have to pay attention to that. So look, you can see that right here, it dropped back down below. It dropped back down below. It's 100% on both of them. You feel me? And it's around here, and it never went back up that high again. You get what I'm saying? Current day has not went back up that high again. Have to pay attention to that type of stuff, y'all. So look, we're gonna skip down just a little bit more. We're gonna skip down just a little bit more, right? We're gonna hit this day. So look, we got more, you know what I'm saying, price movements that we can, you know what I'm saying, look at now. So I'm gonna slide on over here, grab that fib. We're gonna grab this top point of the zone. We're gonna grab the top point of it. We're gonna grab that low point. All right, boom. All right, now let's dissect for one moment. Let's dissect for one moment. Okay. Right now, you can see that the market is definitely bearish currently. Its trend is bearish day-wise. All right. Why do I say that? Because from right here, it's been going down and it's not going up. It's had a little bit of a pullback right around this area, but it's not really, you feel me? So it's bearish currently. As you can see also, because we connected it to this bottom, right now, $1.35 based off of its daily Fibonacci is saying that if it goes below this $1.35 point and it actually keeps closing below that, it's going to probably keep dropping. You get what I'm saying? It's going to keep dropping. Okay? With that being said, right now, when you're looking at this chart, you'll see that it's below this big 0.23 and this zero zone. And then I also want you to pay attention to this 0.61 and this 100% zone, right? I want you to pay attention to those two right there. Ignore this 0.78 that's in the middle, and I'm gonna explain why in a minute. Between this zone right here, the 0.61 and the 100, and then your 0.23 and your zero, between those are where you find your fastest movements in the market, your biggest shifts in the move in the market when that retracement is in those areas. This is what I've come to realize. I don't know why. I really don't. I can't explain to you why. However, this is something that I realized. So I'm telling you. All right. Your 0.5. I wouldn't really, you know what I'm saying? Just be cautious with that 0.5, because that 0.5 obviously can mean anything. Feel what I'm saying? So with that being said, y'all, I'm not going to prolong this, because this, as far as Fibonacci retracements and these zones, y'all really should already know what a zone is. You get what I'm saying? You should already know what a zone is. However, you're just not familiar with the name Fibonacci retracement. The reason it's called that is because it's used to find the retracements. You get what I'm saying? That's what these zones are used for, to find retracements. So as you can see right now on your screen, this is why I say don't stack your, you know what I'm saying? Don't stack your fibs, because then it's going to make it a little bit complicated for you to really see where certain zones and stuff is. However, I want you to pay attention to, which zone would that be right there that I'm seeing? I think that's your day one. Yeah, that's your day one. So look, I do want you to pay attention to this much though. So on your day Fibonacci retracement, I know it's sort of hard to really be able to peep it out, but look, remember I told you that you can buy biodesics, right? If you wanted to. All right, based upon its next Fibonacci retracement zone, it could possibly, and this is based off of, let's see. Because which one is this, y'all? This is why I say don't stack it, y'all. And see, right now, this is why I keep it real and authentic with y'all, so that y'all can understand, like, some things you just don't do. Let me be honest, some things you just don't do. Point being, I don't know which one it is right now. I think it's the day. Either way, you can see that this 0.23% is right here, right? And you can see that the price is down at 1.47. What I want you to pay attention to is the fact that these 20% markers that are down here, bro, it's going, obviously, remember what I said, it has more likelihood to keep trying to fight back down. However, retracing from that, it has new zones that it can reach. From its 12-month, you can see that it can reach up to here, which is about $8.20 as it tells you. And then you can see right here on this other Fibonacci at this 0.23, it says it says $7.38. You know what I'm saying? Basically, it's the Fibonacci retracement telling you, you can say you catch it right now. When I had told you previous, before we had made money off of it, say I told you to go get this investment or to invest in it, you go do it, or you just find it on your own. You feel what I'm saying? It's room to rise. It's major TP3, take profit 3. This is where we get into that. It's take profit 3 in my eyes can be this $7.44 or that $8.20. You get what I'm saying? It can be either one of those. Those can be take profits. Any of your percentages in your Fibonacci in your Fibonacci retracement can be your take percentages. Take profits. My bad, y'all. I got a lot going through my mind. Can be your take profits. All right. Same with your stop loss. Say it's trading up around this 61% right here, around $20, and you catch it around $20. Your stop loss can be at this 0.5, at this 50% area where it says $16. So that's where you can say, hey, I put this, I made sure that in the market I set my stop loss at $16.41, so that if it drops below $16.41, it pulls you out, pulls your money out, everything, and it saves you from losing your whole investment if that's not what you're willing to risk. If you're, you know what I'm saying? Obviously, I have different methods. However, you know, that's how you set your TPs, your stop losses. And if you couldn't already tell, let me clear this stuff out, bro, because I ain't gonna lie. When I see stacked Fibonacci retracements, like stacked like this, I ain't gonna lie, y'all. I don't like seeing it. That's why I tell y'all don't do it. I only did it for the sake of this. Literally. I did it for the sake of this. So let's remove all them drawings and get that out my face because I can't see. So look, I'm gonna tell y'all my favorite time frames right now that I look at, and these literally are golden. It's the same time frames every day, right? I look at the day, I look at the 4 hour, I look at the 1 hour, I look at the 30 minute, I look at the 15 minute, I look at the 5 minute time frame, I look at the 1 minute time frame. Those are the most powerful time frames in my eyes. Now, if you're asking me which ones are superior above all those that I use, if I had to knock it down some more, I would personally say the day time frame, the hour time frame, and the 5 minute time frame. All right? That's what I would say. Now, those are just powerful time frames to me. Why do I say they're powerful time frames for me? One, because I'm a day trader, y'all. Let me actually go ahead and close this out because we done. I'm a day trader, y'all. You get what I'm saying? So because I'm a day trader, I need to know what it's doing today. You know what I'm saying? And what it's been doing daily. Because that's going to help me to make the best inference on what it's about to do. Feel what I'm saying? The hour, because truthfully, I don't advise people necessarily, unless it's a long-term investment. I don't advise people to hold their trades like mad long and stuff. You know what I'm saying? Trying to, wait it out and all this stuff. Now, don't get me twisted, bro. Don't get me twisted. That's a great thing to do. And I also do that. However, I don't just recommend that somebody buys an investment and they just keep hold of it, especially if you don't know what you're looking at. Don't just buy something and hold it, bro. If you say you're getting a call out from me, say you're a real timer, my personal advice to you is to take that trade, and when you see profit from that trade, right? When you see profit, now I'm not just saying the market, it moves it up 5 cents and you're like, oh, let me take that. No, bro, you can give it a little bit more time than that. You feel me? If it go, when it go up, because I ain't even no ifs with this. When it go up 20, 50 cents, $1, $2, when it go up those type of ranges, that's when I advise you go ahead and take it. So that's why I look at hour time frames, because you know what I'm saying, it just lets you see like hourly, like how people are reacting and stuff in a better way. And then 5 minutes, because it's a phrase amongst, I think, all traders and investors, where they say every 5 minutes a new investment is made, or a new trade is made. A new trade idea can be created every 5 minutes. So gotta pay attention to that 5 minute, my boy. Other than that though, bro, y'all boys stay tapped in, man. Y'all boys stay tapped in, cause we at the end of the video now, so I can go ahead and drop that sauce on you now. Look, bro, like I said, this is the last episode, bro, of Trampoline for this series, at least for the public to view. You feel me? We went over the Fibonacci retracement price zones from the 12-month to the 1 minute. Not really on the 1 minute, because I feel like if you drawing Fibonacci retracements on 1 minute, you gotta be you gotta be a penny trader. Like, that's what you doing. You know what I'm saying? But we not doing that. We went over to take profits, our stop losses, then we went over our powerful time frames in this video. Over the course of these last videos, y'all, I have literally given y'all all the information needed in my eyes to look at a chart from a basic standpoint, from a very basic look, from a very beginner's look. You get what I'm saying? With that being said, this is not going to, the next episodes that I have for Trampoline will not be uploaded on YouTube. They won't. I'm sorry. It's a value thing, y'all. It's a value thing. I can't just give y'all that. And at first I was, bro. But then, you know what I'm saying, conversations were had. That's all I'm gonna say, bro. Conversations were had enough to the point of where I realized that I would be cheating myself, and I would really be cheating y'all if I didn't put a price on it. You get what I'm saying? Because it's a reason behind that, but I don't gotta explain all that. Point being, y'all, I say give it about, well, the rest of the episodes, if I'm being honest with you, the rest of the episodes will be accessible to anybody very soon. Really, if you're a real timer and you tap in with me about it, I'll get you set up way earlier than anybody else honestly would, because it's gonna have to be a whole process behind like this. And y'all will see as time goes on. This is why I keep telling y'all I got a lot of plans that's going on right now, and a lot of things and pieces to move on my chessboard that, you know, things are just taking a little time, and we, you know what I'm saying, I'm doing the best that I personally can. You feel me? So, with that being said, y'all, I think I done talked y'all's heads off enough. I hope that you're gaining value from this. I hope and pray that you actually can look at the markets now and at least have some type of idea about what you're looking at, and it's not completely confusing, or you're not just looking and like you go brain dead almost, like, bro, what is this? Feel me? So I hope that this helped enough to the point of where, you know, you'll actually get excited a little bit about trading, you know what I'm saying? Or at least get excited about where money can come from for you when it comes down to investing. And hey, you know, if that be you, you know, check all my descriptions, you know, become a real timer, you feel me, so that you can go ahead and start the process of being in communication with me personally, and so that we can go ahead and really get you to where you want to be with this, man. You know what I'm saying? Because I know for a fact, and I mean this, I know for a fact that the ones that really take this information that I'm giving you, and even the ones that go forward with the rest of the information, y'all are going to realize that this was not a game. And I don't like to necessarily like brag on myself or some crazy stuff like that, like, you know, like boast on myself, because I like to stay humble. However, y'all gonna realize that I wasn't playing with y'all, bro, when I said I'm trying to put you on some money, bro. That's all I'm gonna say. That's all I'm gonna say. So with that being said, man, y'all boys stay up, y'all stay blessed, y'all stay prayed up, man. Y'all already know the vibes. Trampoline episode 3, man. We done, we out. Holla at you, man.